Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Monday afternoon, July 3rd, 2006. We just finished up a holiday shortened trading session here, and it was a positive day for the markets. The Qs here on the screen, the Nasdaq 100 Trust on the daily time frame here, we see a green candle as the market finished up 23 cents. The good news is this market continues to hold above the prior level of support back in May that did turn into resistance for most of June. And now I think that level continues to be an important level. We also see further confirmation that we're getting more into the cumulative stage here with that 10-day moving average crossing up through the 20-day moving average. Now, the bad news is that we've still got a declining 50-day moving average, which puts us on the defensive in this environment. Certainly, there's money to be made. And a lot of people ask me on days like today, does a day like today count because it was such light volume? And I say, if you see profits in your account, or if you see losses, they're real. They're just as real as if they came on big volume. The bottom line is we're in this thing to make money, and on days like today, a lot of times we get, just basically the addicted traders who show up, and we get a nice little uptrend here in the Qs. So the 39 level is where we're at. This is at prior high over here as well. So we were looking for a little bit of resistance near 39, and more importantly, up at about the 39.20 level. I believe that's 39.16. But the market continues to act pretty good here in the short term, although it does remain in the context of a larger downtrend, and that's what we have to be aware of. The market could turn around and turn into a bull market. I don't think it's very likely that that's going to happen. We've still got this large level up near about 40.5 to deal with as well, where we've got the potential for some pretty significant resistance. So overall, it was a constructive day, and the spider. Let's take a look at those S&P 500 trust we've got here that are clearly they've overtaken their 50-day moving average. Now, a lot of times people get all excited because hey, the market's back above the 50-day moving average. I'm going to tell you, be careful. What's the direction of the 50-day moving average? A lot of people went to cash right in here because the market was below the 50-day moving average. But as long as the 50-day moving average, and this is just a general basic rule that I go by, just not really even a rule, but just a quick way to look at what's the trend. If it's above if the 50-day moving average is advancing, generally we're in an uptrend. The market is innocent till proven guilty. If, however, the 50-day moving average is declining, then it's generally considered guilty till proven innocent. It might go above that 50-day moving average, get some people excited, or get some people to cover their shorts up there. But these moves typically do fail. So be careful. Continue to be careful. The market is extended. We've seen this rally from 124.5 up to 128 almost. So we've had about a 3% rally over the last three sessions, and that's putting the risks for new purchases at very high up here. So just continue to be disciplined with your money management and you're controlling your position size. The market in the short term is in an uptrend. I think we're going to start to see the market get a little bit more selective in terms of what's going up. The last couple days, everything has gone up, but now I think you're starting to see some of the weaker stocks are starting to show signs of distribution again, and there'll be some pretty good short setups in here in the short term as well, I believe. The IWM, the Russell 2000 ETF, also overtook its declining 50-day moving average today. You can see that this market we've been watching at that 70 level, and it's gotten pretty far extended from that point. And again, I've got to warn you that the declining 50-day moving average says be very careful. Don't take this rally too seriously. Take it seriously with the longs that you have, but protect them. But don't expect that this is going to turn into a turnaround here. I expect that over the next few sessions, we're going to start to see some pullback. There's no evidence of that right now. So if you're selling short, you're getting run over. You're going to continue to get run over. What we need to see on the short-term time frame is at least these two moving averages start to crisscross. We've got the short-term, intermediate, and longer-term moving averages all heading clearly higher, strongly higher. What we need to see is at least some distribution, some signs that it's being distributed with the short-term trend moving back down through the intermediate-term trend. So the Russell 2000 does act good. It's coming up to this level. where it had some prior trouble near 74. We can call this 73.5 to 74, and maybe we're going to see a little bit more upside. We'll see, but the volume is clearly dropping off, and that's not just because we're running out of excuse me, it's not just because we're running out of buyers up here. It's also because of the holiday trading, and I suspect this week is going to be fairly light trading as well. In about 2 weeks, that's when we're going to really start to see the earnings reports picking up. And right now, you have to be careful of earnings warnings, and then we're going to have to look out for being careful about being in stocks the day before they report earnings, because things can go horribly wrong at times. There were only two open positions, or what I consider to be open positions from what I've been mentioning previously in terms of individual stocks go. First one is AT&T, and on AT&T I'd said that we're looking for it to move up towards about 28 and a half, and the stock today gapped higher up to it, and these are the highs I was looking at actually. I said, that it was probably going to find the potential for some resistance up near these highs at 28.10. And if we look at the 10-minute time frame, we'll see, I'm sorry, the 30-minute time frame here on AT&T, symbol T, that's where the market has run up to. Now, this morning what we had happen here, and this is a good lesson on how to treat these gaps. When we're in the stock gapped open right here to this point at about 28.10. Now we were in the stock at 27.54, and we've been raising our stop in there and looking for, I said, as it approaches 28, you might want to consider tightening your stop or selling partial position. Well, when it gaps up like that, that is an excellent time to take some profits. Now, maybe you wouldn't have gotten out at 28.10 unless you already had an order in. And a lot of times on a listed stock in particular, if you see resistance, the potential for resistance at 28.05, let's say, you can put in before the market opens, you can put in an order to sell the stock at a 28 limit, let's say. Or let's say you put in at 28.05. Well, if the stock opens like it did in this case at 28.10, that's where you're going to get filled. So after that, though, you can see that a lot of people came rushing in, and there wasn't a lot of liquidity. There was a chance to get out probably near 28. Looks like we had a couple bars in there, but then the market came, the stock came back down. Now I would say if you're still in the stock, that your stop ought to go about 27.81. But ideally, after a couple days rally like that on a gap open on a listed stock, that's time to start liquidating. The only other position I had as an open position was this PLC Systems, and this was this big volume breakout on this low price stock. I still think it's probably headed for about $1.30 or so. I'm involved in it. I bought some last week down near 95 cents, and then I bought some Friday at an average cost of $1, averaging up in that position. I think it really needs to get above $1.10. That's where you're going to start to see some of the momentum come back into this stock. So right now it's just doing a low volume consolidation. It's acting the way we would expect it to, up on big volume in here, low volume consolidation down in here. Now the buyers will retake control above $1.10. At this point, I'm not sure. I don't really have a stop in mind necessarily, because this is actually, I probably shouldn't have ever mentioned this stock because it's a little bit more thinly traded than I would have hoped. Only traded 168,000 shares today. Friday 300,000. But bottom line is the stock looks really nice on the chart, and I think it can still head higher. I'm not setting a stop. I'm just gonna kind of watch to see what happens in here. But if I get out of this stock, I don't anticipate losing much money. So I think a new low at this point would probably spook me out of it. That's going to wrap it up for now. Today, again, was a short session, so I don't need to go on and on. I will have another video posted before, I don't know, 5 p.m. Eastern or so tomorrow, depending on what I'm doing. But I will have another video with some ideas for Wednesday. Thanks for visiting my blog here at Alpha Trends. Have a great 4th of July weekend.